All right. I just wanted to go over a few things today. So, first off, to open this up, let me just make sure everything's situated. In the past, I've had a hard time opening this up, so I just wanted to make sure it was working properly. And it looks like everything's good to go. So, with that being said, I'm not a financial advisor. I'm not claiming to be a professional. I'm not claiming anything by making this video. I'm just simply sharing a few ideas and some thoughts that I have. With that being said, just to start off, overall market review, the state of the market, SPY, top gainers and losers. So as a whole, SPY, obviously the S&P index, is currently there was a lot of indecision today. If you just look at today's view, this is today's chart right here. Let me maximize this. This is today's trading. It sold off early in the morning, kind of tried to bounce back up, came back a little bit more, and it was kind of just choppy all day. It was great for scalping, great for trading quick in and out, but for anything more than that, it was a little bit hard to get a true direction. I'll go over a trade that I took on this in a minute, but most of the SPY was just a tough trade. If you traded it early in the morning, it was fine. Afterwards, not so much. See these 5-minute candles right here? That's what I mean when I say that it wasn't a perfect time to trade, because you just get faked out back and forth. You might add a position here at the bottom, and then in just a minute, you're down here, then you're back up here, and you're just back and forth, back and forth. And while this is going on, to those of you that trade options, while this is going on, it's just the theta is just wearing down on your position. So overall, just kind of a choppy day when it's like that. I try not to take positions in SPY or in any real big index. Like I say, I did take one this morning. I'll go over that in a minute. But that's how SPY is looking right now. A few points to note. As for the big picture, here's the daily chart I have. This is a channel drawn back a bit ago, connecting these highs up here. The lows from back in July, or the trend line from back in July to make this full channel. So because of all those trend lines, we've got these 2 points up here. Obviously, you can see the channel that it's trading within. It's not perfect. No channels are ever perfect. They're just lines to base things off of. But it's been doing a fairly good job of the intraday trading. So if you look at the intraday, here's that trend line coming right across, and it actually did bounce off. It had some consolidation within there before it completely broke down earlier on in that channel, and then come 2000, the end of 2018, early 2019, it's bounced off a couple times. You can see that bounce there, see that bounce there, and it just consolidation. Remember, the support and resistance and trend lines aren't exactly areas, but aren't exactly exact points, but they're rather areas instead. So obviously it's not going to bounce off exactly on that line, but it's just a good point of reference. Some other points to refer. This 2019 resistance and support level 249.95. That is for this year. So we've only had a couple trading days for this year. The reason why I have that line is because, as you can see, 2019 resistance support, it bounced off that a few times. I like to mark a few important levels that are indeed something to watch and something to look out for, and that was one of them. As you can see, 2019 came and it bounced right there. Had a hard time getting back over, so that acted as resistance. Kind of chopped around a little bit there. And also, actually, back in 2018, that was the end of the day. It closed right at that same point. So because of that support and resistance, it's just something that I think is worth noting and worth mentioning on the chart. A few other points. We have the 251.15. I believe that is it's a 2019 highs, the point of interest of the highs. And as you can see right here, this is the high. These are the highs of 2019. Obviously, the complete high is 251.4, but it's just I guess that's not in 2019, but it's just a good point to look out for, and that's why I have those on here. To the A little bit more to the upside, we got the February lows at 252.92. That's going to be something that if we get a big rally, especially tomorrow with Powell speaking, if we get a big rally, that's a really good point of interest to watch for us. So those two to the upside, 251.15, 252.92. Over that, I'll kind of just play it by the chart because it's just a tough scenario right now with all that's been going on. I don't use Fibonacci a ton too, but I wanted to show this. I was looking at it intraday today. So if you do the Fibonacci extensions here, this is just on Thinkorswim. If you do the Fibonacci extensions up to that resistance point back in October when the SPY started really falling, when the S&P started really falling, if you do those levels, it actually lines up pretty well. Let me zoom in just a little bit more. All right, so obviously the highs of the 100% line, all these up here, and that 78.6 did work out as some potential bounces. Got those bounces there, tried to make one more bounce and ended up dropping. This is right around December, pretty close into Christmas. Came back right through the 50% line. And we have obviously the zero, the lows of 2018. And then it bounced back up and hit this resistance, that same spot that we just looked at, the 2019 resistance and support, or sorry, 2019 high is the point of interest point. That is the same as you can see, it's the same as that 38.2% Fibonacci extension. So while I don't love to use Fibonacci's on penny stocks and small caps, it's definitely something worth noting. That's where we are right now. You might want to have the Fibonacci extensions on your daily chart to watch. So the close today kind of pushed us beneath that 23.6%. To the downside, I guess I only talked to the upside. To the downside, we have the intraday levels at 244.2. Beneath that, 243.63. Beneath that, I think we could see down towards the hard resistance at 240, and beneath that, we could even approach 2018 lows, in my opinion. If we go over to futures, just to see how everything's trading right now, that's going to use the shorter time frame chart rather than doing that big picture. Currently, we're trading 2442. And remember, this is the S&P future, so this is what some people follow. You can follow this instead of following the SPY when you're trading other stocks. You can follow this instead of following really any other indicator of the overall market, because this is the overall indicator of the market. So right now we're trading right around this 2454 level. I'm just going to use the end of these, so this 54.75 level. That's where we're trading right now. I think that if overnight we drop beneath this 204 or this 42 point, and then beneath that to the 30.03, that's just an area, remember. I think we could see a push down back to the 2400 level. Just my opinion, of course, but that's something to watch. This is a chart that I always watch. I wake up and watch this the very first thing. But if we push down here, this level to watch, 2430, then look for a potential bounce there between that level and 2435. If the bounce doesn't happen, look for possible breakdown towards that 2400 level. Beneath that, we could really see a lot more downside. Back, like I said, with the SPY to those 2018 lows. So just something to watch. A lot of this that I'm saying now could be completely irrelevant tomorrow, because as like I mentioned, Powell, Jerome Powell, the chair of the Federal Reserve, is going to be speaking tomorrow. I believe it's at 10 or 11:15. Let me just double check on that. Yeah, it looks like 11:15 Eastern time. So that's pretty close into the trading day, 45 minutes into the trading day. I think personally, I think there'll be a lot of indecision until that point. And then as he's speaking, or right after he speaks, there will be a pretty big direction in either the upside or the downside, or a pretty big move in the upside or the downside. Which that will be, it's hard to tell right now. There's so much going on in the market and in the government right now. It's really honestly just too hard to tell. If I could tell the future, obviously I'd say so. But just keep in mind these levels of the S&P, those SPY levels that we talked about. If you're trading that, feel free to use those same levels on your own chart, or use any other level that you found to be useful. These are just support and resistance lines. This full yearly channel that I was watching as well, the yearly chart. It's just a good point of reference for me personally. You're welcome to use those same ones. So when Powell does speak tomorrow, the things that I'd be watching the most is either SPY or the futures that on Thinkorswim is /ES, so the E-mini S&P 500 index futures. Definitely be watching that while he's speaking. I wouldn't recommend trading during this time, but it's something good to watch. Another thing that I'd watch alongside of that is GLD or /G. Is it G? I can type. Can't even hit my keys. Oh, there we go. So the gold futures. Definitely be watching this, or like I said, GLD. You could also be watching GDX. Really, whichever one you prefer to choose to watch. What you're looking for, gold is most of the time an inverse of the market. It's not exactly an inverse. I think GLD is like negative 0.55 of the S&P futures. So the correlation is negative 0.55, and so when the futures is going up, there's a more than likely chance that the gold will go down. When the futures or stock market's going down, there's a good chance that the gold will go up. That's why gold is up so much right now. Is just because it's a little bit of a safe haven place to go, and that's where people are going, and it's pushing the market up, or pushing the gold market up while the S&P is going down. Like I say, GLD, GDX. I like GLD because it has more of a correlation to gold futures, but you can really just watch any of those to your preference. Another thing I'd watch is the VIX. You can use the VIX futures if you'd like. You can use this VIX. I don't love VIX. It doesn't really trade as well with the VIX futures as that I'd prefer. I'll personally be watching VXX or VXXB. Both are very similar. The VXXB is going to be transferred over to in the near future. So VXX, VXXB, this is a volatility index. So typically it's similar to gold. When the market is going down, the volatility is going to go up. When the market's going up, the volatility is going to go down. And so that's just something to watch. If you see a really big spike to the upside in the volatility indexes that you're watching, there's a good chance that the SPY futures S&P will go down. Likewise, if there's a big drop in the VIX, then there's a good chance that there will be a big spike in the S&P. So just something to watch. Another one you can watch is LABU. This one, the only reason I'd say to watch this is because it seems to be lagging the SPY or the S&P most of the time. So if there's a big move in the S&P and you feel like you missed it, you can always check over to LABU to see if there's a chance that you can still trade that move. It's going to be really hard. Like I say, I wouldn't recommend trading around 11:15 Eastern. If you do, I mean, by all means you can, but it's going to likely be really volatile, and it's going to be hard to make positions. With that being said, that's a decent overview of the market, what's going on. Two trades I took today, or I guess three technically, two different tickers. I didn't trade a ton today, but let me pull up this buy chart. I traded SPX, but I like to look at the SPY while I do. So the reason I trade the SPX with SPY, SPX is obviously for volume or for options. But I prefer to use SPY because I like to see the volume of what's going on. I was watching the sell off early in the morning and I didn't catch any of that move. So I was just waiting and waiting for a setup. I could have taken this little bear flag here, decided not to. But then as it came back and broke through this 2019 resistance support area that we talked about, we pull up this bigger time frame, we can see that same point that I'm referring to. Remember, we talked about this just a minute ago. These levels right here, then had some here, that resistance support. This is the level I was watching as it broke through that. And then as soon as it broke through, it made a little bit of a bear flag. Let's see, so it would have been, just don't want to make it look like I'm just going back in time, but this is the little bear flag here on the, on the 5-minute chart. I was trading off the 2-minute chart, but it's the same thing. Market's the same either way. So while I was going, I get to this point right here. I see this little bear flag coming into the coming into that resistance support area that I was referring to. After it broke down pretty quickly, I see it coming back into it. And the first thing I looked at was, okay, well, what's my risk reward? My risk would be I'd have a really tight stop loss, and I just put it right above this line. So this would be my risk. If I took the entry right here, this would be my risk. And then where was I going to? Well, there's a channel right there. It could see a little bit of consolidation, but I was looking for a push down to this 244.2 level. If you want to see where I got that level, let me just zoom out real quick. That was the looked at a little shorter time frame. This 244.2. This was a pretty congested area back on Friday, and so I didn't think that it could push too far down beneath that, but I figured it'd be right around that area. I must have adjusted that to be 244.2, but I knew that it'd have a harder time getting through this area than it would through something like this here, for example. Earlier in the day, it fell down pretty quickly. That's because there wasn't a lot of support and resistance in that level. So let me go back to that same chart. All right, so of course, not every level is an exact point. It's just a little bit of area for reference. So what I did is this is my risk. Like I say, I'm risking this much for a potential of this much. Let me do a different color. Hope you can see that yellow on there. It's not the best color. So I'm risking that the pink, and I'm rewarding the blue. That's my trade idea. That's my plan that I have so far. So if I took this position in this bear flag, then my risk reward would be exactly what I'm looking for. Some people will wait for the complete breakdown of the bear flag. In this case, I didn't, and that's because the stock was at a resistance point. If it wasn't at a resistance point, I would likely wait until there's a full break of the bear flag. But because it was right into a resistance point, I ended up taking that stock short, bought puts right here. And then as that stock broke down, it was right. So we were right. Remember, that was our risk. As it breaks down, always scale some. So I scaled into this candle right here. I like to just scale anytime that the stock moves in my direction and goes down a little bit more, hits that price target with this doji. So you can, if you're watching it, it's kind of hard to say now, but if you're watching that stock as it comes down to this level, let's use the pink again. As the stock comes down, this is obviously a bigger time frame, but to make this doji, the stock comes down slowly. Try that again. Like I say, it's hard to say now because it's after hours and obviously everything's back in time. But when the stock made this doji, it was coming down slowly, and then as soon as it hit this point, while watching it, it bounced up pretty quick. And so when the stock does that, I always take off a little bit more of my position because first off, it's right near that point that I was targeting. So I'm trying to take it off anywhere in this area, anywhere as it nears in. And second off, the fact that it was going down slow, like I was just saying here, it was going down really slow. And as soon as it hit that point, a bunch of buyers jumped in and it pushed that stock back up. Buyers, algorithms, everybody's buying the market at that level. And I like it better if the volume's big. That's why I didn't sell the entire position right there. But if you're watching it, like I say, that's something just to watch. You kind of have to stare at the candles. When you're not waiting for the candle to close, just watch it. It comes down slowly, and then it bounced back really hard. Same thing to the upside. If you have a candle going up, or if you're long in a position, watch as it goes up and then hits that point and then falls back quick to push into that hammer doji. So that's what happened in this case down here. It hit my price target, so I was scaling out into that position anyways. And then I moved down my stop loss so that I figured as soon as it'd go underneath this point, that last red candle on the bear flag, then I would sell out of my position as soon as it goes back above that. And I'd either have my stop loss there or I'd take some more profit if it continues to the downside. So I'm waiting here. Let me mark that. And that's exactly what happened. The stock pushed back up, my stop loss was hit, and I was out. Then I ended up trading the stock again. As I got out of that position, I was watching it now. And still watching it, I noticed that it was coming down and started to make a little bit of an inverse head and shoulders. And this is what happened. I actually added on this candle. So as you can see, here's a little inverse head and shoulders. For those of you unfamiliar with that pattern, it's there's the shoulders. So shoulder 1, shoulder 2, and the head. Kind of a funny little name. That's one that I thought was made up at the beginning when I first started, but there's the head, shoulder 1, shoulder 2. So that's what I saw. And my idea was to add on the break of the neckline, which is that trend line that I just drew. The only problem while doing this trade is that the risk reward wasn't perfect at the time. So this is my reward because I'm going up to just that little 2019 resistance and support. And other than that, there wasn't a ton to go off of. So my risk was this blue. My reward was the blue this time. The risk would be under this shoulder, which is the pink, and or underneath the trend line. I'll show what that means in just a second. So what I did is I drew up a few more lines. Since I had more data to go off of, I like the 30-day, 15-minute chart to look at these. So I was in here, had those levels. I ended up drawing a line here. The reasoning for that is because of this support, and that's where we were. So I drew a line there, and I drew a line there. Reasoning for this one, let me clear those past lines. Reasoning for that new line, same idea, support, a little bit of support there, and some support and resistance in this area. So that's why I do that second line. Now I have new price targets. I think if it breaks over my very first price target, then we could potentially see another move up. So here we are. Again, let's see, where's my risk and reward? Close enough right there. There's my risk and reward. So I decided to take the stock long as soon as it broke this head and shoulders. I could have entered earlier, but there wasn't any real resistance there or support there. Like I said, I took this bear flag early because it was at a point of resistance. I wouldn't take this one because it wasn't really at a point of support. Took it long, scaled out right as soon as it passed. That was just a really quick trade, and then decided to just kind of let the rest ride with a stop loss in place. So as soon as it come beneath that shoulder or beneath this trend line, like I was saying, I'd show in a minute. Right there. So there's that trend line. Wasn't beneath the shoulder, wasn't beneath the trend line. And so I was still in the trade at this point. Down a little bit, of course, because of the theta. It was a little bit beneath my entry. But I was still in it with about 2/3 of the position. Almost sold out, but luckily it bounced off that, pushed up, confirmed a continuation of that head and shoulders, and I scaled at this point that I made that 246.97, scaled again at this 247.69. Those might not have been the exact points that I scaled at, but they're pretty much there. So again, I sold 1/3 here, 1/3 here, and that last third right here. What I would have done otherwise is normally I would have just let it ride, but I figured it would be a little bit choppy. These candles in here didn't make me like it so much, so I completely sold that position. The last one that I was going to go over real fast is Apple. This is one that I was watching today. There's nothing too fantastic about this trade that I took. Let me actually pull it up on here. So Apple today was a lot of obviously it was down on lowered guidance. And so I was watching it all day. I don't know why I waited to take the position. I guess there was just too much choppiness in the market. There's a bounce, of course, that would be worth watching. But I just took it into close. I guess I was a little bit bored, took it into close here. I had intraday support and resistance. Looking back on the daily chart, this 240 or 140, excuse me, was a pretty big level. So coming back all the way back to July of 2017, this 240 is this spot, or 242, excuse me, is this bottom line. There was quite a bit of support in there. So I'd already gone back and drawn these lines. Now there I am. And I took the stock short or puts right at this resistance test at 143.27, and I was risking this point here. There's not a ton to talk about this one. It was just a little scalp using support and resistance. This was my risk, the blue. My reward was the pink. I think I did that opposite last time. There we go. Took the stock short, and again, it ended up working in my favor. This was a really small position because I'd already done two good trades. When there's too good, then I'll try to just take it easy, go really small position so I don't give back everything. The stock worked out here, and I of course had to sell, excuse me, right before close, which I did. There's nothing too spectacular on that one. I just wanted to go over it real fast. Hey Tanner, nice you to join us. Join David and I. All right. So next up, just wanted to go over some charts for tomorrow that I was looking at. there wasn't a ton that I was watching because I think at 10:15 a lot of the direction's going to change. So as much of a plan as I go into it a day, a lot of it could change in an instant. But with that being said, Roku, whoops, type. Roku is one I was watching today. This is one that was making a bear flag on the daily chart. I mentioned that I was watching it a little bit ago. The bear flag hadn't worked out yet. It was still in kind of a rough spot. I was trying to take it short on the second, so yesterday didn't really work out. Ended up just pushing back up. Took it for a scalp short, pushed back up long. Anyways, it's had an inside day today. With an inside day, I think I mentioned this a little bit yesterday. What I like to do is mark those two levels. Let's do alerts. So we've got the low of the candle, which is 29.5. So I'll set an alert for 29.5. And then the high of the candle was 32.18. So I'll set an alert for 32.18. Then we have the next day, the low of the previous candle. So I always do the inside candle and the day before that. The low is 29.29. So 29.29, and he's just going to mark it there. Yeah. And the high of that candle is 32.69. So 32.69. So those are my alerts. I think one of those. There we go. I thought it was showing the same alert. So those are my levels. I do always do that whenever there's an inside day. I'm a little bit bearish, of course, because of the pattern right now. It still is in a bear flag. It still is looking like it could make potential downside. But I'll go in tomorrow with a clean eye and see what happens. Like I say, a lot can change, especially with Pal speaking, but it's definitely something to watch. So this is how those alerts look inside. And what I'm normally waiting for is waiting for that 15-minute candle, the opening 15-minute candle, to be created, and then look to see where the VWAP is. If it's beneath the VWAP, I'll look to go down. If it's above the VWAP, I'll look to go long or short and long. And depending on how that is, I'll look for resistance at either of these marks, and I'll go and map this out later, but just kind of wanted to go over the strategy. I'll look at resistance to the upside. So if the 15-minute candle is above the VWAP, next candle is still above the VWAP, I can look to go long as soon as it breaks out of that opening candle. And if it's beneath the VWAP, then I look to go short as soon as it breaks out of the opening candle. If this doesn't make sense, just let me know in the chat. But and I can go over a little bit more. But I'm watching these levels to the upside. And I always set the alerts just in case. The alerts are going to be support and resistance for the next day, but also I have them in case I'm not watching it too closely, that when it breaks out of that inside day. So the moves on inside days can be pretty strong. If it's to the upside, if it breaks over both those points, the move to the upside could be strong, and if it goes down beneath those 2 points, the move down could be pretty strong. So as soon as the alerts are hit, if I'm not watching it already, then I'll look to go short or long, depending on which way that inside candle goes out of. Like I said, let me know if you have any questions on that strategy. Another one that I was watching is Costco. And let me pull up some studies for that one. Actually, I think I have it over here. All right, so Costco. The reason why I'm watching this one so much is because of the $200 level. It's right near. The risk reward seems good on the trade. The Is trading right at $200, and I saw some people take the stock short today, a little bit earlier, but I decided I didn't really want to follow them because I'd rather confirm the break in a case like this. The daily chart is showing another bear flag. There's a ton of bear flags in the market right now, but it's still showing that. As you can see, there's the bear flag, looking like it broke down a little bit. But I didn't want to take that short quite yet because of how strong that $200 resistance is. If we go back on the chart, let me just mark this real fast. Here's a $200 level. Remember this middle line. If we go back, this $200 level right here, there was a lot of resistance in there. We go back some more resistance, and then I think before that there wasn't anything. But because of that, because it was such a strong point earlier on, that means it's a really necessary spot to watch. I guess $200 would be like what I call the cowboy level of big caps. But with that being said, let me draw a few more support and resistance lines for the trade idea. I am bearish on this name right now. I will say that. Okay, there we go. Looking at the intraday chart. Here's that bear flag I was talking about. Turn off extended hours. So there's the bear flag, breaking down of that bear flag, but I didn't want to jump into it, like I said, because it's such a strong point. I didn't want it to just bounce right back, and my trade wouldn't go as well as I was hoping. So the trade idea for tomorrow: watch the $200 level. As soon as that breaks, look towards this 197 mark. Beneath that, 195. Beneath that, 192, and beneath that, the current year lows at 190. The long-term target would be 190. I might actually overnight this stock if the market's looking like it's to the downside. Again, I've said it several times already, but the Jerome Powell speaking at 11:15 is going to be a big deal, and I don't want to jump into it with too much bias. So this would be my reward. My risk would be $205. Just because that's a decent resistance level that I'd need to get over before I'd completely decide to exit the trade. With that being said, if it breaks beneath $200 and then some news comes out, or when Powell speaks, something happens and the market pushes up, I definitely look to get out of this position early. It's just not something that I'd be willing to hold. Same with Roku. If I was down on it, if I took the inside day down, I'd look to get out as soon as some positive news comes out and the market starts rallying up. It's just not worth the risk to me to hold on, because even if the technicals are there, some other factors can change that. One last one I was watching today, like I said, actually two more. There wasn't a ton I was watching. Is AAPL. And I personally, I don't think a ton is going to happen tomorrow on this name. I think we might actually get an inside day with where it is. The daily chart, if we look at that, it's kind of just in a steep falling wedge. Tried to break out with the market rally. And then, of course, the bad news, push it right back down. I think there's more downside towards $138 if it breaks under 142. So that's a big level to watch. After hours today, if you look at after hours, it still hadn't broke beneath that $142 level. So if it breaks beneath that, look for some back tests up to that area to go short. If it's a really strong move, watch for bear flags, watch for pennants to the downside. And that's about all I have to say for that name. I'm really not sure if it'll get to that point. It could really push down, but it might also just kind of chop around again and have an inside day or just not much action at all. Again, if it breaks down, good news comes out, market starts rallying up, then I would look to exit that position early. But a full breakdown long term, I'd look to see $138. That's both a resistance point and or a support point right around. Let's see if I'm looking at the daily chart. The reason why I say 138 is because of this level. So 148 is this part down here. That'd be my long-term target. My short-term target would be $140. So 142 breaks, 140 next target, 138 long-term target. One last one real quick that I was looking at was Nike. I don't love the option chain on Nike, but I still thought it was worth watching. I've got a bunch of indicators on this chart here, and I actually might have a better view on. Let's just see what I've got. Yeah, this will be better. So on this chart, as this blue line here is the 200 SMA, this was rejected at the 200 SMA and the channel resistance. We've got this purple channel coming down, similar to how SPY looks. The stock was rejected at that point, or at both those points. It was rejected at the moving average as well as the channel resistance. So I'd honestly be looking to go short pretty quick off it if the market looks good. Going over this chart now, I'll just kind of show how I go through that. So what I normally do is start with a 15-minute. Just take the horizontal line tool. So I've got some resistance here, some support here, congestion, which means it was likely some support and resistance areas. So I'm going to put a line there. To the downside, let's see what we've got. Let's squeeze this chart in a little bit. The downside, let's do right there. The reason why is because of these spots. Then just kind of pointing that out, walking through how I would do that. Then if we go out a little bit more, let's actually switch to the 30-minute view so we don't have such a tight range that we're watching. If you go to the 30-minute view, it looks like there's a decent spot here. Reasoning for that being resistance, some choppiness, resistance, support, some choppiness, resistance, support. Just kind of, it doesn't have to be perfect, remember, but these are just spots to watch. And actually that bottom line, we didn't see all the way out here, but that was a pretty good spot back there too. And that's about all I'd look for. We can go some more to the downside. Same idea as those past two. I'm not going to circle everything on it. But looks like there's some spots to watch around there, and but let's stick with that because we can chart it all, but we don't even know if it'll get that far, and it might just be a waste of time. I like to just chart it within the range that it will be likely trading, so then I can look at some other charts to trade instead. So with that being said, now we've got some points drawn out. I'm bearish on the name, so I just drew lines to the downside. You can go through and draw lines to the upside too, if you'd like it. And just to point out real fast, those lines that we just drew on the 30-minute chart, we were only looking at this area. But if we look at the daily chart now, we can see that those same levels were actually really important on the daily chart. They held up pretty well. So that's just something the market, the past history of the market can tell the future of the market. Not always, of course. It's not going to tell you everything, but especially with support and resistance I always say look back to look forward, look back where has it gone to look forward to see where can it go. Continue with what I was saying. I'm bearish on the name, but I'd look is probably depending on how the market looks, if it looks like it's holding up in the morning and pushing, I'd go. So if one thing I guess I should explain, if the market looks like it's really strong overnight or really strong in the morning, these stocks that I was bearish on, I'll go back through and mark to the upside. I could do it right now, given the fact that I'm doing this live. I'm not going to, but if the stock looks like it's pushing up in the morning, I'll go and draw the lines to the upside. So I'd go put in the things, go put in some lines here, up all the way up. Um, so I don't want to take too much time with this. I'm not going to, but that's just something I think is worth mentioning. So what I'd be watching is if tomorrow the stock looks like it's holding up well around the 72.50 level, I'd look for a push up into resistance to possibly take it short. You could get a little bit more risk reward if you take it to the upside. Or I'd look for a breakdown, likely beneath the $72 area. So this is 72.18. I'd probably look for $72 even. And if I take it short under there, my long-term target, I'd say about 71 and then 70.48. So all these levels that I've marked, these are just price targets. They're not exactly, of course, always scale out on the way down, but they're just good points of reference to watch for. Stock breaks down. I'd wait, honestly, I'd probably wait until around $72 unless it looks like it pushed up and was rejected. Then I'd take it up here. As it comes down, look to go short around 72.59, $72 area with long-term target around 71, 70.50. So if you took it short here, for example, this would be a risk and this would be your reward. Risk reward looks good. If you took it short here, I'd say this would be a risk to this, the high of the day, and this would be your reward, maybe down to here on both those. And if you took it, waited for topping to short, if it topped out around this area, anywhere around here, if it started topping, which means you might get a lot of upper wicks, that's a good sign that there might be some selling going on. If it starts to look like that, you might look to take it short, and in that case, your risk would be just over the 73.43 level, in my opinion. So this would be your risk, and your reward would be clearly to the downside, these levels. So that's the best case scenario. If it tries to push up and it gets rejected, obviously scale out on the way down. I like to scale out around these areas, especially move down stops, etc., etc. That's all that I'm really looking at tomorrow. There's two people watching, probably David and Tanner. But if you guys have any questions, just let me know. Otherwise, I will call it a day. I'll just wait a second. All right, so I'll just close it there. Remember, Powell speaking 10:15 tomorrow. It's 45 minutes into the market open. Personally, I think there's going to be a little bit of chop going on in the early morning. Once he starts speaking, like I said, watch the VIX, watch gold, watch the S&P. And if you're late to either of those trades, look at LABU for a little bit of lag where you can go to either direction. I said this a little bit earlier. But watch those. If the VIX starts pushing, look to go short the S&P. If gold starts pushing, watch the VIX and S&P to go short. And yeah, I wouldn't really take it. I probably won't be taking anything until after he speaks and there's some clear direction in the market. Just not worth the risk for me unless I'm just taking a scalp early on if something really looks strong. But yeah, with all that being said, thanks for watching, and I'll see you guys tomorrow.